Have you ever felt like the market is playing a game you were never taught the rules to? You see headlines screaming about a stock. You watch friends on social media posting their wins. You feel the itch. I can't miss this. So you finally jump in, and then the market pulls the rug out. You're left wondering, why does this keep happening to me? Here's the truth nobody tells you. The market is a game, and Wall Street has been playing it longer, faster, and smarter than most retail investors ever will. But today we're going to flip the script. We're going to break down Palantir, ticker symbol PLTR, one of the most explosive stocks on Wall Street. I'm going to walk you through what's happening behind the scenes, what most people are missing, and what's likely coming next. And if you stick with me, you'll walk away not just with a forecast, but with a framework to trade smarter, with more confidence and less fear. Here's what we're diving into today. Why Palantir has exploded this year. How the Wyckoff method reveals the invisible roadmap that Wall Street follows. What key technical indicators, like multi-timeframe RSI, MA shift histogram, and lowest channel, are telling us. Why Tom Lee, one of the most respected voices on Wall Street, believes the next 45 days are critical. And most importantly, what you can do over the next 3 to 6 days to avoid the common traps that most traders fall into. And don't worry if you're new to this. I'll explain everything in plain English so you can follow along and apply it right away. Let's set the stage. Palantir has been on an absolute tear, up over 60% this year. Why? Because they sit at the intersection of two of the most powerful forces in the market right now: artificial intelligence and government contracts. Palantir isn't just building another app. They're building the software backbone for governments and defense agencies, tackling problems most companies wouldn't dare touch. And Wall Street has caught on. But here's where the story gets even more interesting. On the macro front, the Federal Reserve has paused interest rate hikes. This is like opening the floodgates for growth stocks. The Trump administration is reshuffling its cabinet, tightening national security, and throwing tariffs into the global mix, all of which fuels uncertainty and volatility. And then there's Tom Lee. Now, if you're new to trading, you might ask, who's Tom Lee and why should I care? Great question. Tom Lee is the co-founder of Fundstrat Global Advisors, a former JP Morgan chief strategist, and one of the few analysts who famously called the 2009 bull market, the 2017 crypto boom, and multiple market rallies that left the crowd behind. When Tom Lee speaks, institutions listen. Right now, Lee is calling the next 45 days a window of potential millionaire-making gains, particularly in tech and AI. So when you combine Palantir's fundamentals, the Fed's support, Trump's unpredictability, and Tom Lee's bullish stance, you get a cocktail that demands attention.
All right, let's bring this to the chart, because this is where the hidden story unfolds. Accumulation phase between $70 and $90. This is where the quiet accumulation happened. Imagine a garden in winter. It looks still. Nothing seems to move, but underground roots are spreading. This is where institutions were quietly building positions while retail traders ignored the stock. Spring phase around $60 to $70. Here's where the market played its first trick. A fake breakdown. Prices dipped below key support, panic set in, and weak holders rushed for the exits, right before the stock reversed and exploded higher. Distribution phase between $110 and $120. Now comes the excitement. Media attention, social media hype. The public rushes in, buying with both hands, but they're buying from early players who are quietly trimming their positions. Markup phase, where we are today. The stock is running, the crowd is euphoric, but here's the catch. This is also when risk quietly increases because the easy money has already been made.
Let's decode the tools we use in the Trade the Fear system, the tools that help us avoid chasing and start anticipating. Multi-Timeframe RSI, around 79 to 80, overbought. Think of RSI as the market's heartbeat. When it's racing too fast above 70 or 80, the market is overexerted and it's time to catch its breath. Right now, Palantir's RSI is screaming overbought. Pay attention here. This doesn't mean the run is over, but it means chasing here is dangerous. We want to wait for RSI to cool below 65 to 70 before adding exposure. MA shift histogram, green positive momentum. This measures momentum, like wind in a sailboat. When the MA shift is green, the wind is at your back. But if you see momentum flatten while RSI is elevated, that's a yellow flag. We want to stay in the trade while the wind is strong, but reduce exposure when the wind starts to die. Lowest channel, price above the upper band, overextended. Think of this as the road's guardrails. When the price drifts above the upper band, it's like a car veering too close to the cliff. Right now, Palantir is outside the channel. This is where we pause. We don't accelerate. We tap the brakes and wait for price to drift back inside the guardrails. Wyckoff emotional cycle, markup phase. Markets move through emotional phases: accumulation, markup, distribution, markdown. Right now, we're in the markup phase, but smart money is already eyeing the next transition. If you only remember one thing today, don't get caught chasing at the emotional peak. Let's connect this back to the macro picture. The Fed's pause is like rocket fuel for growth names. Trump's tariffs and cabinet shakeups add surprise and volatility. Tom Lee's bullish call gives confidence to the institutions, and when they have confidence, money flows. But here's the danger. Most retail traders only react to headlines. The pros combine headlines with technicals to anticipate what's next. That's the edge we're teaching you today. So what's the road ahead? Most likely a pullback to $115 to $120 as RSI cools. Possible sideways consolidation, letting the market digest gains. Worst case, a drop to $100 to $110 if a macro shock hits. Here's your playbook. Current holders take partial profits, 10 to 20%, and trail stops near 110 to 115. Waiting buyers, be patient. Wait for the dip or consolidation before entering. Remember, the 100 shares mission is about buying quality on fear, not chasing on hype. You're here because you want more than just hot tips. You want understanding. You want control. You want to break free from the cycle of emotional investing, and you're ready to level up. So here's what to do next. Smash that like button if you found value here. Drop a comment below. Tell me your PLTR plan, or simply say, I'm in, to join the community. Share this with someone you care about. Help them avoid the traps. And subscribe, because we are building a mission, not just a channel. And as a thank you for sticking with me to the end, grab your free 100 shares mission guide at www.get100shares.com. Because at the end of the day, trade the fear, guiding beginners to build wealth one share at a time.